Now, we'll start with chapter 2.1, which talks about tax rates. Everything related to tax rates, I have combined it in one chapter. That is this chapter, guys. Rates of tax is given in Annual Finance Act, but not every rate, only the normal rates. Whereas the special rates are given in the Income Tax Act itself. Now, the tax rates depends upon the category of person, individual, HUF, company, firm, and all. Then it depends also on the amount of income. Then residential status of a person only in case of especially individuals. They are eligible for some higher basic essential limit and are under optional regime. Then age of the individual also will matter only under optional regime. Only under optional regime, guys. Whereas type of income. Now, sir, what's the type of income? Guys, income can be divided into two categories. Special income, normal income. Special income you will consider only if it is given in the question specifically. What are special incomes? We will see it later. What and all it includes. Now, if income includes special income, then on that the rate is always special. The rates on special income is given in the respective section under Income Tax Act only. That is 111A, 112, 112A, 115BB, BBJ. All these are the sections which covers the tax rates applicable on special income. Now, whenever there is a special income, first calculate tax on it. Then on the normal income. Then on the normal income. Sir, for normal income, what is the rate applicable? Normal rate, guys. It can be either slab rate or flat. For few associates, it is slab rate. For few associates, it is flat. Yeah, all this we will learn one by one. So, this normal rates, where is it given, sir? Annual Finance Act. Is there any dedicated section for it? No. It is a part of Annual Finance Act. And this rate depends on what scheme the assessee has opted. So, especially for slab rate assessee, we have something called a default scheme, optional scheme and all. Will this rate change, sir? Yes, it will change. Whereas special income, whatever is the tax rate, guys, it remains same. Whichever scheme you choose, whoever you are. Whether you are a company, partnership firm, LLP, AOP, BOI, individual, whoever you are, the income, whatever special income you would have want, the tax rates remain same. The tax rates remain same. Okay, sir. Now, I have also given the list of the special income on which special tax rates are applicable. I will cover it later. Okay. First, the computation format. First, the computation format, guys. First, whenever the question is on tax liability calculation, check does total income includes any special income. So, who will I know? Once you have learned the provision, you will understand which are the special income. If they are given any hint about that in the question, first calculate tax always on special income at special rate. Then on the balance income, which we call it as normal income or balance income, calculate tax at either at slab rate or flat rate as applicable to the assessee. As applicable to the assessee. Now, sir, what if the question is silent about special income, sir? Consider the entire income as normal income. Consider entire income as normal income. Okay, sir. Fine, sir. So, tax on balance income, I will calculate at slab rate or flat rate depending upon who is the assessee. This will always remain same, guys. Only the slab rate or flat rate, which we call it as normal income, only that will change depending upon the category of person and depending upon the scheme opted by them. Okay, sir. Once we call this as gross tax liability. Gross tax liability. And if the assessee is a resident individual whose total income is within 5 lakh in case of optional scheme or within 7 lakh under default regime, they are eligible for rebate. They are eligible for rebate. How much is the and all? We will see it later. If they are eligible, they will claim the rebate. They will reduce it. Okay, sir. After that, whatever tax liability they will get, they will take it. And surcharge only if applicable. Yes, surcharge also is not always applicable. It is applicable only if total income is more than 50 lakh, 1 crore, 2 crore, 5 crore, 10 crore. Applicability, how do we calculate? You will understand later. I am just in the first stage where I am explaining the format. Clear? If surcharge is applicable, you have to calculate it only when the total income crosses some limits. Okay, not always. When surcharge is applicable, on what amount? Assume surcharge rate is 10%. I should apply it on what amount, sir? Gross tax liability, not on income. Gross tax we would have already calculated on income, whereas surcharge is always on gross tax figure. Assume, guys, gross tax is 10 lakh. 10% is the surcharge rate. So, how much would be my surcharge? 10 lakh into 10%, 1 lakh. Hope you guys are getting it. Now, as a format, I have given both rebate as well as surcharge, guys, but both simultaneously will never come. Why, sir? I told you rebate is available only when total income is up to 5 lakh or up to 7 lakh. But surcharge is applicable only when your total income is more than 50 lakh. Then why did you give both years as a format? But for the same assessee in the same scenario, both will not be there. When rebate is not there, when rebate is there, obviously surcharge is not applicable. And when surcharge is applicable, obviously rebate will not be available, guys. Oh, now health and education cess will always be there at 4%. Whenever I am liable to pay tax, guys, I am liable to pay the health and education cess. Health and education cess rate is fixed always at 4% for everyone. Now this is on which figure, sir? Gross tax plus surcharge. Gross tax plus surcharge. Whatever figure you get, on that you will apply 4%. On that you will apply 4%. Sir, now assuming surcharge is not there, rebate is there. What should I do? Claim rebate always before cess. Always before cess. And even after claiming rebate, if you still have positive tax figure, add 4% for it. Add 4% for it. If not, no cess. Clear? For example, sir, my gross tax was 20,000, sir. Where is it? Here. 20,000, sir. I claimed a rebate of full 20,000, sir. Now, what is my tax after rebate? Nil. So 4% should I show and all? Not required. Final tax payable is 0. That's all. Is that clear? Yes. So please be careful with the format, guys. Always you have to follow the same procedure, and especially rebate when it is available, please provide it for before cess. Very important. Before cess. Okay. So this will be my final tax liability which I need to pay to the government, and this should always be rounded up to nearest 10 rupees as per section 288B, guys. 288B. Okay. So this is about the format. Let us now get into the rates. Very important. Keep both your ears open and be attentive. Okay, because there are few changes here. Important, guys. In tax rates chapter, there is a changes. There are few changes. So not only changes, everything is important. Sir, only amendment is important. No, everything is important. Amendment is little more important. Okay, sure. Income taxable at normal rates, gross rate or base rate. I told you normal incomes are there, which depends on the category of person, what is the rate and all, or which is the scheme they have opted. Na? We are discussing first that. Then we will see the special income. Okay, sir. Now, for the first set of people, individuals, HUF, AOP, BOI, and artificial juridical person. For them, one optional option is given under section 115 BAC. Once, initially when it was introduced, it was called new regime. But now they have made it as default regime. Means it is understood that if you are not told anything, you are following 115 BAC, which is default scheme. Yes, sir. But under section 115 BAC, tax rates are kept lower. Tax rates are less, but they have taken away all the deductions and exemptions. Most of them, I cannot tell all of them also, most of them, actually whichever gives actual benefit to the assessee, most of them they have taken off. Clear? So, if you want to follow default regime, then the tax rates are kept lower when compared to optional regime. But you have to forego various deductions and exemptions. There are list of exemptions and deductions which you have to forego. But I am not covering it in this chapter. What I will do is I will cover it along with the heads of income. Under each head of income, we will discuss various deductions, exemptions, everything. At the end, one single page I will give where I will tell you what all we have learnt in this head, which is allowed, which is not allowed under default regime, so that it would be easy for you. So under default regime, what is blocked or what is not allowed, we will learn it along with the heads of income deductions chapter and all. Yeah, yes. So, but you should know that, sir, if I want to follow default regime, then I have to forego certain exemptions and deductions. Yes, sir. So what happened? Made a strategy like this. I will show to the people that, hey, tax rates under default is lower. Tax rate under default regime is lower. So people try to follow this, telling government has given me that option. But the twist is in the total income calculation. In the total income calculation, what happens? Automatically, the total income under default regime will go up. As you cannot claim few deductions and exemptions, the total income will shoot up when compared to optional regime. So now, if you ask me, sir, which is beneficial, which one should I follow? Guys, you have to do like this. You have to do the calculation under both default regime, optional regime. Default regime, optional regime. So under default regime, first calculate total income, or both you calculate. Total income you calculate. Both under optional regime and default regime. In my understanding, total income under default regime will be more guys when compared to optional regime. Because as I told you, few deductions, exemptions are blocked. See, there can be few cases where it is equal also. But majority of the cases, it will change because of blockage of deductions and exemption. Also calculate taxes. Sir, should I make any decision based on this? No, no. Where you will decide is based on tax liability. So apply the rates, whatever is given under both default regime and optional regime on the respective total income figures, calculate the tax liability. So this figure, whatever you get, you choose based on whichever is lower. Whichever is lower. This is the best way of decision making. Now in the exam, will they ask any questions like this under? May or may not be. But be ready for it. Be ready for it. Yes. If they ask you to make any decision making, normally only computation they will ask. If at all, if they ask you to make decisions, be ready for that. Okay. Because they are making you ready for a practice later. Oh. Now, sir, now, is it my choice to follow default or optional? Yes. See, default is kept by default. You guys also will have some default settings in your mobile and all. Now, if you don't like, you can go and change it. Yes, same way. If you don't like this default scheme, madam, why so much blockage? I cannot be like this. I want to be independent, free bird. I want to claim all the exemptions and deductions. Opt out of default regime, go and follow optional regime. No problem. Sir, can I keep on changing every year? One condition is if I am the assessee who doesn't have any income under the PGBP, profits and gains of business or profession, I am free to change it every year. Every year, I can do the calculation. Whichever is lower, I can go with it. Wherever my tax liability is lower, I can go with it. Sir, can I keep on changing every year? Yes, you are freedom. You are free bird. You can change it. If I have the income under the PGBP, they are putting some restriction. Now, assume I am a slab rate assessor. I call them guys, this all people put together. In short, I call them a slab rate assessor. Individual HUF, EOP, BOI, and artificial juridical person. Okay, sir. Now, I am a slab rate assessee. I have PGBP income, sir. What about me, sir? What about me? Guys, please pay attention. This is important. Confusing also to some extent. It is understood that you are under default regime. You are under default regime. Sir, now can I opt out of default and go to optional scheme? Yes, you can. Now, once you go to optional scheme, it is understood that you will continue under optional scheme. Next year, again, should I choose, sir? No, it is understood that you will continue under optional scheme. Sir, again, I didn't like it, sir. Can I come back to default scheme? Yes, you can come back. Once you come back, you will continue under default regime? Yes, you will continue. Again, I didn't like, sir. This restriction and all, I didn't like. Can I go back to optional regime? No, you cannot. You cannot. Until you ceases to have business income. Until you ceases to have business income. Hope it's clear. For example, I repeat. Now, whenever I have income under that PGBP, it is understood that I am following default. No, I don't like default. Straight away, can I opt out of default and follow optional scheme? Yes. Once I opt out of optional scheme, it is understood I will continue under optional scheme in the future years. Okay. Sir, in 5th or 6th year, I am not liking it, sir. I want to come back to default. Can I come back? Yes, do so. But once you come back again, you can never go out. You can never go out. Sir, you can never go out means what, sir? You can close your business, again you will become a free bird. If you want that freedom. Clear. Means every year, especially when the assessee is having PGBP income and all, every year if you keep on switching, then it will be a headache for government also. They don't know. I am giving you freedom, but restricted freedom, not complete freedom. Once you can switch and come back, but again not. Again not. Whereas if I don't have PGBP income, guys, I told you every year I will do calculation under both the schemes. Choose whichever is beneficial for me. Okay, so fine. So we have to forego certain exemptions and deductions. If I'm not ready for it, then I can opt out of default regime and follow optional scheme. Now, from exam point of view, what should we do, sir? Guys, question specifies which scheme you are supposed to follow, what is the calculation you have to do, under which scheme and all. If by chance if question is silent, go with default and give a note. It is understood or it is assumed that assessee is following default regime. This is only when question is silent. Oh, let us see the tax rates under default tax regime. Because there is a change or amendment in this, please be careful. So any individual, whether they are resident or non-resident, irrespective of their age, there is no change in the basic essential limit. Every HU of AOP, BOI and artificial juridical person. What is that tax rate is? Tax rate on their normal income. Whatever we are discussing is only on normal income. Up to 3 lakh, we call it as basic exemption limit. No tax. It is nil. Then from 3 lakh to 7 lakh, that is more than 3 lakh up to 7 lakh, it is 5%. 7 lakh to 10 lakh, 10%. 10 lakh to 12 lakh, 15%. 12 lakh to 15 lakh, 20%. More than 15 lakh, 30%. It is called slab rates. Higher the income, higher would be the tax. We call it as like income tax is a progressive in nature. As you progress, government also will progress automatically. How? By collecting more and more taxes. Yes, sir. These are called slab rates, guys. I will discuss later about the question and all. See, okay, let me just give it as an example here. Assume my total income is 18 lakh. How do we calculate the tax, sir? On the first 3 lakh, nil lakh, guys. First 3 lakh, nil lakh. Yes, 3 to 7 lakh. What is the difference between upper limit and lower limit? 4 lakh. On 4 lakh, 5%. 20,000. Next. Yeah. Next. From 7 lakh to 10 lakh, the difference is 3 lakh between upper limit and lower limit. On that 10%, 30,000. Next, 10 lakh to 12 lakh, the tax rate is 15%. What is the difference between upper limit and lower limit? 3 lakh. On 3 lakh, 15%. Sorry, 2 lakh. The difference between upper limit and lower limit is 2 lakh. 2 lakh, it is 15%. So 30,000 again. Next, 12 lakh to 15 lakh, the difference between upper limit and lower limit is 3 lakh. On 3 lakh, it is 20%. Comes to 60,000. Next, above 15 lakh. Sir, what is the total income I told? 18 lakh. Above 15 lakh, how much is there? 3 lakh. 3 lakh into 30%, 90,000. Total of 230 or 230. No rebate, no surcharge in this case. So straight away 4% health and education says you have to add and pay it. I have just shown how do you apply the slab rates. By now you guys would have been expert, but still, sir, we learned it long back, sir. Sure. Next. Any confusion? No. I have told you the list of the exemptions and deductions which are blocked. I will cover it along with the respective chapters. Now, sir, no, sir, you told lot of restrictions here, so I don't want to follow, sir. So you can opt out of default regime and follow optional scheme. Optional scheme is given under the Annual Finance Act, guys. There is no respective section for it. We just call it as optional scheme or optional regime. Okay. What are the tax rates, sir? For same set of people, but only for individuals, some extra thing is given here. Okay. Yes. So for slab rate assessee on their normal income up to 2,50,000 nil, 2,50,000 to 5 lakh 5%, 5 lakh to 10 lakh 20%, more than 10 lakh 30%. Easier actually, but rates are higher when compared to default regime. Okay. If assessee is a resident individual aged 60 or more anytime during the previous year, then they get the benefit of higher basic exemption limit of 3 lakh. Yes, sir. Sir, what if they are aged 80 or more? This is 60 or more, less than 80. Whereas this one is more than or equal to 80 years. Who is the resident? Please be careful. These benefits are only for residents. If I am a non-resident individual, 80, 90, 100, whatever it is, basic exemption limit is 250. Or if I am a HUF, AOP, BOI, whoever it is, okay, other than individual, always it is 250. Oh. If I am a resident individual aged 80 or more, I am called super senior citizen. Sir, if you have touched 80, you are Superman, sir. Especially for today's generation, if you have crossed 80, great, Superman. So they are giving the basic exemption limit as 5 lakh. First slab is not at all there. First slab is not at all there, guys. Okay, sir. So straight away for them from second slab. Okay. Now CBDT has also clarified that even if the assessee is celebrating their 60th or 80th birthday on first April of assessment year, still they are eligible for higher basic exemption limit. Still they are eligible for higher basic exemption limit because they would have celebrated their 60th or 80th on 31st. Completed. Celebration will happen on first year, but completion would have happened on 31st March. So they don't, okay, higher very rare case. The person would have gone on full scale. First April. Okay. And they are touching 60 or 80 in our first April of assessment year. Only then this confusion will come. The rest of the cases, if you already crossed 60 and up, you are already eligible for 3 lakh. Sir, already crossed 80, already eligible for 5 lakh. Enjoy. Oh, this are for slab rate accuracy. Sir, what about the other set of people, sir? For partnership firm, LLP or local authority, the tax rates would be 30% on their normal incomes. The total income, which includes only normal income. Then for coming to companies, well, for tax rate purpose, companies are divided into two, domestic and foreign. Clear? So now the foreign company, there is a change in this amendment, 35%. What is the tax rate, sir? 35%. Whereas for domestic company, they have optional scheme, guys, under section 115 BAA or BAB. Okay, there also, if they are choosing it, they have to forego certain exemptions and deductions. But for domestic company, we don't call it as default scheme. We call it as optional scheme. So if they are following BAA, then the tax rate is 22%. If they are opting for section 115 BAB, then it is 15%. And BAB is available only for domestic manufacturing company, which has been set up on or after 1st October and before 31st March 2024, for which time period is already over. So time period is already over means whoever would have been set up during that time, they will continue to pay tax even after 31st March 2024. At what rate? 15%. You should have set up your business between these dates. Clear? And even these guys, whatever we call it as optional schemes, they have to forego certain exemptions and deductions if they are following optional scheme. What do we call the schemes as? Optional scheme, not default. No, sir. Again, you are telling that restrictions are. What should I do? If you don't want this optional scheme, you will continue under normal provisions. This we call it as normal provisions. Now, if I don't want to follow optional scheme, then check whether I am a small company or not. How do I check whether I am a small company or not, sir? Check in your financial year 22-23, what was your turnover? In financial year 22-23, if your turnover is up to 400 crore, then for the year 24-25, you are considered to be small company. And tax rate would be 25%. Guys, we are deciding the tax rates for previous year 24-25, for which we are checking which year turnover? 22-23. Sir, what is the logic behind, sir? It will not make sense. No, it makes sense. Why is that? We will see. Guys, I am deciding the rate for 24-25. Definitely, we don't know the turnover for 24-25 because I should know the tax rate from the day one. From 1st April itself, I should know the tax rate. Yes, sir. Now, sir, what about last year? Why didn't you take last year, sir? 23-24, why didn't you take? Guys, we close books of accounts as on 31st March 24. But literally, do we close it on 31st March only? No. As per books, we will write as on for the year end date and that. But by the time we close the books, we will take another 2-3 months, 4 months. Clear? Now on 1st April only, will I know the exact turnover for 23-24? Even if it is 1st April 24, which is after the end of financial year 23-24, still this year turnover will not be accurately available. And there is also chances that the assessee might shift some of the sales of this year to next year, especially last month's sales and all. They will push it to claim that they are a small company. So in order to avoid that, what government told, we will take 1 year back. 1 year back. So to see what is the tax rate for 24-25, we have to check which year turnover. 22-23. Sir, will it be available by 1st April? Yes, definitely. Already more than 1 year over. No? You will be having that date. Yes. Okay. Then any other company means the domestic company which is not following the optional scheme and their turnover is more than 400 crore. For them, what is the tax rate? 30%. They are not small. They are not small. Guys, first check whether the domestic company is following optional scheme. If yes, accordingly the rate under the respective section. If not, normal scheme. Under normal scheme, what is the tax rate? Depends on whether they're small or big. How do I call it as small? If their turnover in the year 22-23 is up to 400 crore, we call that company as a small company and the tax rate is 25%. What if it is more than 400 crore, sir? Then 30%. Then it is 30%. Oh. Yes. And if by chance, if question is silent, you are supposed to calculate tax on domestic company, go with 30%. Go with 30%. That is the only one question is silent. Next, for cooperative society, slab rates are applicable. Up to 10,000 income, 10%. No basic agency limit papa for them. 10,000 to 20,000, 20%. More than 20,000, 30%. Okay. But even for cooperative society, they have provided something with optional schemes. Not default, optional. Only for slab rate assessee, we call it as default scheme, guys. Okay. Yes. What is it? We will see. Tax rate in case of manufacturing cooperative society resident in India set up and registered on or after 1st April 2023 and commences manufacture of article or thing before 31st March 2023 means only during that time we should have set up. Opting for concessional tax regime under section 115 BAE, the tax rate is 15% of their income, whatever they are earning from their manufacturing business. Tax rate in case of other resident cooperative society means who is not manufacturing. What is the tax rate applicable for them? They have an optional scheme under section 115 BAD. This is for the resident cooperative society other than who is engaged in manufacturing. What is the tax rate, sir? 22%. So optional schemes are available only for resident cooperative societies. If they are engaged in manufacturing, then section 115 BAE. What is the tax rate? 15%. Now, sir, they are not into manufacturing, but they are resident. Then, section 115 BAD is available, under which tax rate is 22%. 22%. Okay. But here also, if resident cooperative society is following section 115 BAD or BAE, then they have to forego certain exemptions and deductions. But in detail provisions about this cooperative society is not a part of your intermediate syllabus, guys. Now coming to the most important element where there are some major amendments, guys. Tax rates on special income. Tax rates on special income. Income taxable at special rates, special income. We call it as special income. These incomes are taxable at special rate for all category of assessee, irrespective of the tax regime followed by them, whether they are following default or normal or optional, or even for company and all, we have optional and normal. Whichever they are following, the rate remains same, guys. So please be attentive. Again, ultra attentive. First, section 111A. 111A, 112A, and 112 is a part of capital gains hit. I am covering it now. Again, I will cover it even in capital gains head, guys, later. Section 111A covers short-term capital gain on the transfer of three assets. Equity shares listed on a recognized stock exchange, unit of equity-oriented fund, unit of business trust. In short, I call them as EFT. To remember, that's all for students' purpose. E stands for equity shares, F stands for equity-oriented fund. T stands for trust, units of business trust. Short form. No, sir, I can remember like that without shortcut also. Very good. Okay, yes. Condition is STT should be paid. That is securities transaction tax should be paid. Whereas for equity shares, both at the time of purchase and sale, whereas for units at the time of sale, guys. Yeah. Now, what's the tax rate, sir? Depends on what is the date of transfer. Guys, with respect to capital gains, especially, we have important date that is 23rd July, which is a key date. So, what is the date of transfer you have to see first? Is it from 1st April to 22nd July? Or is it from 23rd July to 31st March? 31st March. So, depending upon that, tax rates are clear. Even after 31st March, new rate only will be applicable. But we are concerned about what? Our previous year. Our previous year. Which is our previous year? 24, 25. Yes. Now, if the date of transfer is before 23rd July, that is from 1st April to 22nd July, it is 15%, which was already there. Now, if it is on or after 23rd July, then the tax rate is 20%. Madam, increase the rate to 20%. Only if transfer happens on or after 23rd July. Okay, sir. Now, all other capital gains other than EFT, all other capital, short-term capital gain is a normal income, taxable at normal rate. Normal rate means obviously it varies from person to person under the respective schemes. Whatever we already saw above, same rates will be applicable depending upon the category of person. So when it comes to short-term capital gain, all short-term capital gain is not special. It is only on the transfer of EFT. Sir, what if I avoid short-term capital gain on the sale of land, building, gold, or any other assets? It is not special. It is a gain taxable but at normal rates. Okay. Sir, what if the same three assets are held by me for a longer period and I sold it? Then it is called long-term capital gain. Long-term capital gain on the transfer of EFT is covered under section 112A, guys. Even for this STT to be paid condition is there. What is the tax rate? If the date of transfer was before 23rd July, that is in between 1st April and 22nd July, then the tax rate is 10% on the long-term gain exceeding 1.25. Means up to 1,25,000, which is not taxable. Next. Sir, what if the date of transfer is on or after 23rd July? That is from 23rd July to 31st March. Then the tax rate is 12.5% on long-term capital gain exceeding rupees 1,25,000. You can observe, see wherever amendments is there, I would have highlighted in italics. If you can observe the difference. Yeah. So when you guys are also studying, give little extra importance for it. Okay. So this I would have highlighted in italics. Okay. So they told tax rate was 10%. Now we have increased it to 12.5%, but you will pay only in excess of 1,25,000. So 1,25,000 means for both can I claim? No, no. Per annum it is 1,20,000. Per annum it is 1,25,000. Now please pay attention. Sir, 23rd July is the key date, sir. Okay. Now before this, after this. Before this, after this. I am talking about 112. Yeah? Sir, here I have 1 lakh income, here I have 1 lakh long-term capital gains. How is it taxed? This is not taxable. Full 1 lakh exemption. Remaining still 125 is there? Yes, I will claim it here. I will claim it here. So, only on remaining 75, I will pay how much tax? 12.5. Is that clear? Yes. Next, sir, what if the figures are 2 lakh each? 2 lakh, 2 lakh. So you will reduce 1.25 lakh here. Remaining 75,000 is taxable at what rate? 10%. And here, entire 2 lakh is taxable at 12.5%. Guys, one important thing to notice here. Please pay attention. If I have long-term capital gain totally under section 112A, how much guys? Totally 4 lakh. Entire 4 lakh should be included under your capital gains head while computing total income. While in calculating income only, don't reduce 1,25,000. You have to include the entire amount. Only while calculating tax on special income you will calculate. Under that 112A, only then you reduce 120. Okay, now if I ask you in the same question, how much you will include under net capital gains? 4 lakh. Will it be a part of total income calculation? Yes. Only while calculating tax, reduce 120. Only while calculating tax, you reduce 125. Because by mistake, while calculating income only, you can reduce 125. No. That is not right. Clear? Yes. Even in my previous example, I guess I told 1 lakh, 1 lakh. What's my long-term capital gain? 2 lakh. Include it in the income calculation. Only by calculating tax, you reduce 120. Reduce 125. Okay, sir. Fine. Next. Sir, what if it is only 1 lakh here? No tax. Sir, only 1 lakh here? No tax. No tax. Next. Sir, only 3 lakh here? Minus 1.25. So remaining 1,75,000 will be taxable at 10%. Clear? Sir, only 3 lakh here, minus 1.25. How much is remaining? 1.75. Taxable at 12.5. 12.5. Is that clear? So here what I am trying to communicate is 125 has to be adjusted on FIFO basis, guys. 1,25,000 has to be adjusted on what basis? 125. That is FIFO basis. 125 has to be adjusted on FIFO basis. Okay, sir. Because actually in the law, they are not told exactly against which will you adjust first. But you have to follow FIFO basis. It is understood that we have to follow FIFO basis, guys. Okay. Hope it is clear. Let us move forward. So total exemption per year is 125. Don't claim 125 here, 125 here. Okay. Please be careful. This 125 benefit is there only under 112. Sir, what about 111? Yeah, no. Entire amount is taxed. Entire amount is taxed. Next, 112. Important because there are a lot of subcategory here. Here, I have divided mainly into two parts based on date of transfer. If the transfer is before 23rd July, then there are three set of assets. Three set of assets. First set, unlisted securities or shares of a closely held company. In simple, private limited companies. Okay. Check next, who is the assessee? If assessee is a non-corporate, non-resident or foreign company, then the tax rate is 10% on the gain what you have computed without indexation and without foreign currency fluctuation. What is that foreign currency fluctuation? That calculations and all is not a part of your intermediate syllabus. But tax rate is 10% on the gain computed without indexation and without the foreign currency fluctuation. Now, sir, what is that foreign currency fluctuation? Just for your knowledge, I will tell you. When I would have bought the shares, the exchange rate would be different. When I am selling it, exchange rate would be different. Due to which I would have suffered some exchange loss or exchange gain. So can I claim that? Can I adjust it? You cannot. You cannot adjust it. Okay, sir. Then what if it is other assessee like resident and also other than non-corporate, non-resident and foreign company? All others will come here. Yes. What is the tax rate, sir? 20% on the gain with indexation. 20% on the gain with indexation. Yes. Next, second set of asset. First set of asset done now unlisted security. Second one is listed securities or zero coupon bond. In that case, what is the tax rate? Option is given to the assessee. 10% without indexation or 20% with indexation. Whichever is more beneficial to the assessee. Obviously, he will go with what? Whichever is lower. Whichever is lower. Next, other assets. Other than covered under section 112. So, here what and all will come means other than EFT and securities. Other than what? EFT and securities. Because EFT is covered here. Securities will fall either in this. Clear? Guys, if it is even listed securities will not cover equity share. Why? Because equity share will come here. If it is any other listed securities, only then it will come here. Under this category. Yes, so. Other assets means what and all, guys? Other than EFT and securities. Means what, sir? Land, building, gold or any other capital assets. Clear? Yes, so. What is the tax rate? 20% on the gain with indexation. With indexation. Okay, if question is silent and if the date of transfer is before 23rd July, always go with this rate. Always go with 20% rate. Okay, sir. This is when the date of transfer was before 23rd July. Sir, what if the date of transfer is on or after 23rd July? If the date of transfer is on or after 23rd July, then the new rates are applicable. Actually, it is simpler. Madam has made it easy. Clear? What is it, sir? No indexation. First of all, no indexation. But indexation is available only in one case. When is it? Land or building or both acquired by whom? Resident individual or HUF before 23rd July. Land, building acquired by whom? Resident individual or resident HUF. When did they acquire? Before 23rd July. When did they transfer? After 23rd July. Makes sense. Why? Obviously, sir, when it is a long term, you would have acquired it before 23rd July, and so sale is first what? After the data, that is after 20, on or after 23rd July. And here they are telling you should have purchased it before 23rd July. So, what is the tax rate, sir? lower of 20% on the gain with indexation or 12.5% on the gain without indexation. Lower, whichever is lower, you will choose it. Means I have to compute both the capital gains, yes, with indexation, without indexation. With indexation, without indexation. Are you guys getting it? Yes. This benefit, is it available for everyone? No. Actually, when Madam announced the bill, the impact or the amendment, she got no indexation for any asset. Received a backlash from real estate sector. Everyone started blasting, criticizing. Government's move. We will get a big hit there. So that is when they changed it. Okay. If it is for a resident individual and HF who has purchased the property before 23rd July, we are giving indexation. There also they have kept one twist. What is that twist? I will disclose it. But before that, let us understand the rate first. So what is the tax rate, guys? Lower of 20% on the gain with indexation or 12.5% on the gain without indexation. Okay, sir. In any other case, 12.5% without indexation. Any other case. Simple. Rate is what? 12.5% without indexation. Only in one case they have a choice. Old rate or new rate. Old rate or new rate. For whom, guys? Resident, individual or HGF. Is it for all the assets for them? No. Only for land or building acquired before 2030. Sir, now resident, individual or HGF has a gold, sir, or security, something else. Can they claim indexation on it? They cannot claim indexation. Is that clear? So indexation also will play a major role for this exam specs. And 112A, anyway, indexation is not available for these assets. 112A, previously also it was not giving any indexation. Now also there is no indexation. Okay, sir. Now, so you can see this part I will read. Land or building or both acquired by a resident individual or HF on or after 23rd July or other assets other than covered under section 112A acquired any time. What is the rate? 12.5% without indexation. Now there is no asset category like this and all. Every case it is 12.5% without indexation. Only one thing you have to remember is this part. Rest all is 12.5% without indexation. Clear? Yes. Look at the irony. Made them increase the rates, short-term gain from 15 to 20%. Long term, especially on investments, from 10% to 12.5%. After this amendment or after these changes, no investor has made a gain. No investors are in India, I'm talking about, have made a gain. Why? Market is in the correction mode. Okay, last 1 year almost, market is in the correction mode. Okay, government told if you gain, I will tax you more. So there is no gain, only pain. Only pain. Actually, if you are really invested in the market, you will understand, or you may connect with me. What is happening in the stock market or investing? So market is bleeding, correcting, falling. Sir, only if I have gain, they will tax me more. So I don't have gain only now. What do you do? Okay. So madam increase the tax rates with an intention that they can earn the more revenue, more tax. We should have first income to pay tax. Nah? There is no gain in investments this year. Okay. Sure. Now that we can set off carry forward. But what I'm trying to tell is after this change, there is no gain for entire year. There is no gain. Most very rare people, if they are really done good, they would have made some little money, not huge money, but majority of them are under loss. In last 1 year, I'm talking. Yeah. Oh, now one major twist which is given by the madam, let us discuss. Guys, this part is crucial. This part is crucial. Better, okay, I will do one thing. I will cover it in capital gains sheet. Okay, because now you don't have a complete knowledge of capital gains, calculation, indexation, that this and all. Let me touch it in capital gains only. There in detail I will cover it. Anyway, this sections again I will cover it there. Okay, fine. Now coming to section 115 BB. Casual income. BB as well as BBJ both cover casual income. These incomes are taxable under the head other sources tax. At what rate? 30%. At what rate? 30%. Winnings from lottery, crossword puzzles, races including horse races, card games and other games of any sort, gambling or betting of any form or nature, we call it as casual income. But this will not include winning from online games. Why, sir? Because for winnings from online games, they have added a separate section. 115 BBG. Oh, under both the section, tax rate is 30%. And both the section, tax rate is 30%. Sir, what is the winnings from online games? Can you see that? Are you using any of this platform? Good. You use only something related to your studies. CA. ಏನು ಆಡ್ತೀಯಾ IPL ಸ್ಟಾರ್ಟ್ ಆಗ್ತಿದ್ಯಾ good. So don't waste your time on all this unnecessary things, guys. Definitely you will not make money. You will lose money also. First thing. Second thing, you are losing your time, energy, and all. No one has become rich by betting. The person who organized it would have become rich, not the person who would do it or play it. Coming to section 115 BBE. In the initial chapter, when I was discussing unexplained investment, unexplained money, unexplained expenditure, and all, there I told you this income is taxable at highest rate of 78%. Actually, tax rate is 60%, plus surcharge will always be there at 25% and 4% cess. Effectively, rate comes to 78%. Effectively, rate comes to 70%. Where is it given, sir? Section 115 B. Let me read it. Unexplained money, investment, expenditure, etc. deemed as income under section 68 or section 69 or section 69A or section 69B or section 69C, 69D. Did we cover all this? Cash credits, unexplained investments, unexplained expenditure. Learned na? So these are taxable at what rate? 60% in the year in which it is detected. Clear? Sir, is it only 60%? No. Government wants more. 25% surcharge plus 4% cess. Effectively, rate comes to 78%. If you are really good in maths, your question should be, sir, 60 plus 25, 85 plus 4, 89, sir. Correct, na? You didn't get that though. That means you are not good in maths. 25% surcharge is on tax, not on income. So it is like this. On 60, we have to add 25%. Okay, whatever we get plus 4%. I explained you the format. Na? Surcharge is always on tax, not on income. Whereas 60% is on tax. Sorry, on income. On your income. Hope you guys got it. Okay. But one special thing, guys, against this, you cannot even adjust basic exemption limit. You cannot set up any loss. You cannot claim any expenditure. You cannot claim any expenditure. Then against all the special income, all special income, you cannot claim any chapter 6A deductions. You cannot claim any chapter 6A deductions. Listen, one important thing. Guys, I am a slab rate assessee. I have only 3 lakh income under BB or BBJ or BBE. Can I enjoy the basic essential limit? No. Entire 3 lakh will be taxed at whatever rate is given under the respective section. Under whatever rate is given under the respective section, it is taxable. Yes, sir. But, sir, I have only 3 lakh or 2 lakh capital gains income. Can I claim the benefit of basic essential limit? Yes, only if I am a resident individual and HF. Only if I am a resident individual and HF. First, you will adjust your normal income against the basic essential limit. If you still have some shortfall or unexhausted basic essential limit, you can set it off against capital gains special income. Against capital gains special income. For example, my total income is 8 lakh. 8 lakh. In that, normal income is 2 lakhs. Long-term capital gain under section 112 is 6 lakhs. I am a slab rate assessee. Assume I am following default regime. What is the basic essential limit applicable for me? 3 lakh. What is the shortfall I have? 1 lakh. Can I adjust it against this, sir? Yes. Minus 1 lakh. Only remaining 5 lakh is taxable. Only remaining 5 lakh is taxable. Did you get it? Yes. This benefit is available only for resident, individual, or HGU. What about others, sir? Or what if the assessees are non-resident? They don't have that benefit. Entire 6 lakh will be taxable for them. Entire 6 lakh will be taxable for them. So adjusting this basic essential limit benefit is available only against capital gain special income. Sir, is it available against casual income or even against undetected incomes and all? That is unexplained thing. No, that benefit is not available. That benefit is not available. Yes, sir. One more important thing. Sir, what if I have two, three special incomes? For example, I have long-term capital gain under section 112A also. Sir. In what order should I adjust? There is no prescribed order. So, for example, assume guys, this is file. Let me take it as this is 2, right? So 3 lakh. 3 lakh. I will take it. Now, sir, 1 lakh against what can I adjust? Choice is yours. There is no prescribed condition or sequence in the law. But you should make sure that you will take the maximum benefit. Wherever the rate is more, adjust there. Wherever the rate is more, adjust there. Is that clear? So you know the rates now, accordingly adjust it. Now, what if instead of long term, if it is short term, capital gain under section 111A? Definitely, I will adjust against this because rate is highest here, 20%. Is that clear? Next, sir, if it is 112A, assume I am adjusting 1 lakh against this. Remaining is how much? 2 lakh. Is 2 lakh fully taxable? No. 1.25 you have benefit there also. No? Remaining 75 will be taxed. Remaining 75 will be taxed. Hope you are getting it. Clear? So adjusting this 1 lakh when you have more than one category of capital gains income is your choice. Is your choice, guys. Okay. But this benefit are not available against casual income and all. Okay. And chapter 6A deductions, guys, from section 80C to 80U, you cannot claim any of these deductions against special income. Against special income, you cannot claim any of the deductions under chapter 6A. Okay. So these are like unexplained incomes are taxable at 60% plus surcharge 25%, 4% says. Then you cannot claim any basic essential limit, you cannot claim any allowance expenditure against the income, and even you cannot set up any loss against this income. Okay, so. Sir, what about capital gain special income and all? Can you set up loss and all? Yes, we will see that in the last chart. Long term loss can be set up against long term gain, short term loss can be adjusted against either short term gain or long term gain. Whereas here you can never have loss. For income tax purpose. Definitely you will have loss. Okay, but for income tax purpose, you are not allowed to claim any loss. Even, sir, I have won a lottery income of 10 lakhs, sir. But from that last 5 years, I used to buy the lottery tickets and all. So I have spent around 8 lakh on buying of lottery ticket. Can I claim it as an expenditure? No, you cannot claim any expenditure against the casual income. Sir, can I set up any loss against it, sir? No, you can. Oh, sure. Next, we'll proceed further. Rebate and section 87. Rebate is available only for resident individual whose total income is within the threshold limit. What is it? Varies from optional scheme and default scheme. If the assessee is following default regime, they are eligible for a rebate under section 87A only if their total income is up to 7 lakh. If their total income is up to 7 lakh, the amount of rebate would be 100% of their tax liability or 25,000, whichever is less. Whichever is less. Okay. Next, sir, what if their total income is marginally more than 7? 7 lakh 5, 7 lakh 10,000, 7 lakh 20,000. Papa, they should not lose the benefit of rebate, so they don't. Yes, you can do the following steps calculation, and if you are eligible for rebate, take it. So if my total income is slightly more than 7 lakh, you can check these steps. How is it, sir? Total income minus 7 lakhs. First step, keep it as that. Okay, let me explain with a number. Assume guys, my total income is 7 lakh 15,000. 7 lakh 15,000. So total income minus 7 lakh, how much you will get here? 15,000. 15,000. Compute income tax liability on total income. What is my total income? 7 lakh 15,000. Assume guys, I'm just randomly taking it. My tax liability comes to 27,000. Okay, you have to apply slab rates and calculate under the default regime. I'm just taking 27,000. Okay. If B is more than A, you are eligible for rebate. Is B more than A in my case? Yes. By how much, sir? 12,000. 12,000 is the rebate available for me. So how much tax should I pay? 27, which is actually there, minus 12. How much we will get? 15,000. On that 4%. On that you have to add 4% health and education cess. Logic is simple. Sir, if my total income is within 7 lakh, what is the tax I should pay? Zero. How much tax should I pay? Zero. Now, just because my income crossed 7 lakh by 15,000, my tax is going from zero to how much? 27,000. Increase in income over and above 7 lakh is how much? Only 15,000. But due to that, my tax limit is going from where? 0 to 27. Clear? Huh? So, increase in tax is more than increase in income over and above 7 lakh. So, they told, okay, it's not sensible. It is not feasible. Let us give them the rebate. So, what is the amount of tax liability, guys? Actually, 27,000. From that, I will get rebate. How much? 27 minus 15, 12,000. I will claim the rebate under section 87A. Remaining is how much? 15,000. On that, add 4% health and education cess and pay it. That's all. Okay. So I have given one number you. This is a computed figure, guys. Only if your total income is more than 7 lakh, but up to 7 lakh 22,220, check these steps. Check this step. Sir, what if it is 7 lakh 30,000, 7 lakh 40,000, 7 lakh 50,000 and all? No need to check. Even if you check, you will get zero rebate. You will get zero rebate. So try to remember this amount. It is not given in the law, guys. But it is good to remember because you should know exactly when to apply these steps and all. You can at least remember 7 lakh 22,000, not 220. At least remember 7 lakh 22,000. So if your total income is more than 7 lakh but up to 722, check these steps. If it is more than that, no need to check the step. Even if you apply and check it, no problem. You will get zero. That's all. Why, sir? Because step 1 will be more than step 2. Step 1 will be more than step 2 in that case. Okay. This is the rebate under section 87A under default. What if the assessee is opting out of default regime and following optional regime, sir? They are eligible for rebate only if their total income is up to 5 lakh. 5 lakh. How much is the rebate? Actual tax liability or 12,500, whichever is low. Sir, what if my income is more than 5 lakh? No rebate. Marginally, no rebate. No rebate. Sir, what about this concept? Not available under the optional. Not available under optional. So this concept is only under, guys, default. Only under default. Okay. Next, coming to the notes. Notes common for both the schemes, that is default as well as optional. So whatever rebate we will calculate is like our gross tax or the amount, what is the maximum under default regime 25,000 or under optional regime 12,500, whichever is lower. Oh. Next, rebate should always be calculated before health and education cess. For whatever tax you pay under section 112A, that is on the long-term capital gain on the transfer of EFT, no rebate is available. No rebate is available. For example, assume, sir, I am following default scheme. Okay? Default scheme, my total income is 6 lakhs. My total income is 6 lakhs. In that, long-term capital gain under section 112A is 2 lakhs. And normal income is 4 lakhs. So, basic exemption limit I will claim your 3 lakh under default regime. So, on 1 lakh, it is 5 lakhs. Correct? Hello? On 1 lakh 5,000. Correct? In excess of 3 lakh. 3 to 7, how much? 5%. So, I am taking only 1 lakh. This is the difference. Okay. On 2 lakh, 1.25 benefit is there. Remaining is how much? 75,000. Assuming it was before 23rd July, I am applying 10%. Okay. How much you get? 7,500. So if I combine both, what is our gross tax liability? 12,500. Am I eligible for rebate under section 87A, guys? Yes. How much? Actually, 25,000 or actual tax liability, whichever is lower. Correct? Ah? Yes. Can I claim full 12,500? No. Against this, you cannot claim rebate. So, how much rebate I can claim? Only 5,000. Remaining 7,500 should I pay? Yes, by adding 4% cess. OPY. So for whatever tax you pay under section 112A, rebate is not available. Both under default scheme also, under optional scheme also. You can't claim under 112A tax. Sir, is it available against 111A tax or 112 tax or 115BB under? Yes, rebate is available. Only against 112A they are told it is not available. Against any other tax, you can claim rebates. You can claim rebate. Walk. Now coming to surcharge. This is over and above the tax. That is whatever we would have learned above is called gross tax. Over and above that, this is actually leading to tax on tax. Not good for the people to pay, but still government is living on the wealthy people. Whoever has a total income of more than 50 lakh, 1 crore, 2 crore, 5 crore, 10 crore and all, as you have too much money, pay little extra. Pay little extra. This is over and above whatever gross tax we have discussed. Guys, please be careful. This is always calculated on which figure? I already told you. Gross tax. Gross tax. But the applicability of surcharge we will decide based on total income. Only if your total income is crossing certain limits, only then surcharge is applicable. So for applicability, you see total income. But for calculation, you will apply the rates on what amount? Gross tax. Gross tax figure. But one old year, one small pinch here is, please be careful with this. Tax on special incomes, whatever you calculate, for slab rate SSC, they have told maximum surcharge rate is 15%. Okay, only on capital gain special income, not on 115 BB and all. Okay, what is it? I will explain. Don't. Yeah, surcharge. Surcharge is an additional tax payable over and above income tax. Surcharge is levied as a percentage of what? Income tax. Percentage of income tax is nothing but gross tax liabilities. Is nothing but gross tax liability. Yes, sir. For first set of people, that is slab rate assessment. What do we call them as? Slab rate assessment. Who and all is there, sir? Individual, HUF, UOP, UOI, and artificial juridical person. If they are following default scheme given under section 115BA, C. What is that? Surcharge rate. We already seen the slab rates. That is different. Surcharge is different. Where the total income, including all the income, including all normal, special, everything. If it is up to 50 lakh, no surcharge. If it is up to 50 lakh, no surcharge. Clear, sir? Sir, clear, no? If it is more than 50 lakh, up to 1 crore, 10%. More than 1 crore, up to 2 crore, 15%. Guys, this is not slab. Please be careful. Assume my total income is 1.5 crore. What is the surcharge rate? Hey, what is the surcharge rate? 15%. Slab, no, straight away. Okay, whatever is my gross tax, on that 15% is the surcharge. Now, be attentive. We are under default regime. If total income is more than 2 crore, excluding capital gain special income and dividend income. Excluding capital gain special income and dividend income. What is the surcharge rate? 25%. Whereas whatever tax you would have calculated on capital gain special income and dividend income, on that what is the surcharge rate? 15%. So you have to do separate calculation there. Clear? So you would have already calculated till gross tax. So now gross tax includes, as you first check, will it include any tax on capital gain special income or dividend? If yes, on that surcharge will be 15%. Whereas on others it is 25%. Provided excluding capital gains income and capital gain special income and dividend income, your total figure is more than 2 crore. Excluding the capital gain special income and dividend income. Only then, whatever tax you would have calculated on those income, what is the surcharge rate on that? 25%. Whereas whatever tax you would have calculated on capital gain special income and dividend income, on that what is the surcharge rate? 15%. 15%. Sir, my total income is more than 2 crores, sir. But including all these figures, system. Yeah, for example, sir, my salary income, okay, my salary income is 1.5 crores, sir. Long term capital gain under section 112 is 1 crore, sir. Is 1 crore, sir. Only if I add up both, it will be more than 2 crore, guys. Correct? Ah? If I exclude only, it will be more than 2 crore. So what they are telling? Calculate tax on both, add 15% surcharge. Sorry, 25%, 15% surcharge. Add 15% surcharge. Is that clear? Yes. Next, sir, this itself is 2.5 crores. So you will calculate tax separately on this, calculate tax separately on this. On this figure, whatever tax amount comes to, on that, what is the surcharge rate? 15%. On this, whatever tax you calculate, on that, what is the surcharge rate? 25%. 25%. Hope you guys got it. Clear? Yes. Now, sir, what if the same set of people are shifting out of default scheme and following optional scheme? Almost same with one minor change. Up to 50 lakh, no surcharge guys. More than 50 lakh up to 1 crore, 10%. More than 1 crore up to 2 crore, 15%. Same, till year same. Next, more than 2 crore, but up to 5. Excluding capital gain, special income and dividend income. The surcharge rate on that is 25%. Whereas on capital gains income and dividend income, whatever tax you would have calculated, on that the surcharge rate is 15%. On that the surcharge rate is 15%. Okay. Sir, what if it is more than 5 crore excluding the special incomes? Then on that income, whatever tax you have calculated, on that surcharge is 37%. Whereas on special incomes, whatever tax you have calculated, on that the surcharge rate would be 15%. Clear? So this is an additional thing under optional guys. Whereas under default, it is straight away more than 2 crore applicable. Whereas here more than 2 crore up to 5 crore is there, then more than 5 crore also is there. This is additional part. This is additional part. Clear? Yes. Sir, my total income is more than 2 crore, but not excluding special incomes. Only if I include that special income, it is more than 2 crore. Then calculate tax, gross tax. On entire gross tax, surcharge is 15%. On entire gross tax, the surcharge rate is 15%. Is that clear? Yes. One thing to note here is they have considered dividend income also here separately. Dividend income is actually not special. It is always taxable at normal rate under the hit other sources. No special rate is applicable for it, but only for surcharge they have taken it. The reason being simple. All these are investment based income. All these are what? Investment based income. Capital gains as well as dividend. Government told maximum surcharge we charge on the investment based income is 15%. Whereas any other income, yes, it depends on how much you have. It depends on how much you have. Is that clear? Clear, no? So you can see I have given a note. Maximum surcharge rate applicable for capital gains taxable under section 111A, 112 and 112A and dividend income is 15%. 15%. What? Next, coming to other assessors. For firms, LLP and local authority, if the total income is more than 1 crore, surcharge rate is 12%. When total income is more than 1 crore, 2 crore, 5, whatever is, surcharge rate is 10%. Whereas for domestic company and foreign company, it is different. For foreign company, if the total income is more than 1 crore up to 10 crore, it is 2%. More than 10 crore means it is 5%. Whereas for domestic company and cooperative society, if total income is more than 1 crore up to 10 crore, 7%. More than 10 crore, 12%. Clear? Easy to remember and logic also I will tell you. Guys, for domestic company already tax rates are lower. Whereas for foreign company, tax rate itself is already 35%. That is why surcharge is kept lower. Whereas domestic company enjoys small, less rate, lower rate. So that is why here rates are kept higher. If you earn more than 1 crore, start paying surcharge. Clear? And sir, what if the total income is less than 1 crore? No surcharge. No surcharge. Please be careful. Here they are talking about total income, not sales. So they may sometimes give sales is more than 1 crore and all. No, no. We are talking about total income for income tax purpose. Okay. Now easy to remember, guys. Listen here. For foreign company, it is 2 and 5%. 2 and 5, correct? Because already the normal rate is kept as 35%. So that is why surcharge is kept lower. 2 plus 5, 7. 7 plus 5, 12. Go in that order. Go in that order. For domestic company, more than 1 up to 10, 2%. More than 10, it is 5%. 2 plus 5, it is 7%. So for foreign company, more than 1 crore up to 10 crore, 12%. Clear? Sorry, 7%. More than 1 crore up to 10 crore, 7%. More than 10 crore, 12%. That is 7 plus 5. 7 plus 5x. Yeah, this is just a shortcut to remember. Yeah. If a domestic company is following optional scheme given under section 115 BAA or BAB, or resident cooperative societies following 115 BAD or BAE, for them surcharge rate is always 10%, no matter what is their income. They have only 1 lakh income, 10 lakh income, 1 crore income, 10 crore income, 100 crore income. Surcharge is always 10%. Surcharge is always 10%. It is not dependent on their total income. It is not dependent on their total income. Coming to guys, AOP is already covered here itself. AOP you can see, but now they have brought one new concept for AOP, who is having only company as members. AOP, all their members are who? Companies. In that case, if it is more than 50 lakh up to 1 crore, 10%. More than 1 crore, 15%. That's all. After that, there is no other rate. After that, there is no other rate, guys. Yeah. Next, surcharge is conditional. Only if your total income is more than certain limit, it's applicable. Whereas health and education cess will always be there at 4%. It will always be there at 4%. Okay, so next, guys, total income should always be rounded off under section 288A for the nearest 10 rupees. Nearest 10 rupees. 288A. Same way they tell total tax payable or final tax payable and refund due has to be rounded off to nearest 10 rupees as per section 288B. Tax liability. Actually, we are talking about tax liability, but I have given both together so that it would be easy for you. 288A talks about income. 288B talks about what? Tax liability. Which one will come first? Income or tax liability? Yeah. Income. So income has to be rounded off as per 288A. A will come first or B will come first? A only, na? So 288A is for income, 288B is for tax liability. Both has to be rounded up to nearest 10 rupees. For example, how is it, sir? 5 or more next to 10, less than 5, previous 10. For example, 6,78,708. What should I do? 710. Next, 706, 710. 710. Next, 703. 700. 702. 705. 710. 5 or more next to 10. Okay. Yes. This can be income or tax liability, whatever it is. Remains the same. Yeah. Now, previously we learned that, sir, if I have agriculture income, it's completely exempt. As per section 10.1, yes. But is it completely true? No. How is it? We will understand. Actually, agriculture income is exempt. But when the same agency has both agriculture income as well as non-agriculture income, what government has strategized is you have to follow this procedure. When you follow this procedure, indirectly they are making you to pay higher tax on your non-agriculture income. Means they will push your non-agriculture income for a higher rate. For a higher rate, guys. So, how is it? We will see. Whenever same assessee has both agriculture income, non-agriculture income, they have to follow this. Sir, is every assessee supposed to follow it? No, no. I have given it here. Who has to follow it? Slab rate assessee, guys. The concept applies only to individual, HUF, UOP, BOI, or artificial juridical person who simultaneously have both. That is, they have both. Agriculture income more than 5,000. and non-agricultural income more than basic essential limit as applicable for them. Whatever is the basic essential limit applicable for them depending upon the scheme and age and all. Okay. So if I'm a company partnership firm and all, is this applicable? No, because for them flat rate. For them it is flat rate. Now guys assume I have both agriculture income, non-agriculture income. On my non-agriculture income, maximum I am paying 10-15% tax rate. By following the below steps, they will make me to pay little higher tax. As I have both, they will make me to pay little higher tax. That's all. So only when I have both, I have to follow this. Okay. And not everyone, I have told you who and all. Oh. The object of aggregating the net agricultural income with non-agriculture income is to tax the non-agriculture income at a higher rates. They're just trying to push your non-agriculture income for a higher slab. For a higher slab. So what are the steps, sir? First, take agriculture income, non-agriculture income, add up both. Guys, C is not total income. Don't call it as total income. It will be wrong. Actually, total income is this figure. Non-agriculture income. Okay, na? Yes. Add up both. Calculate tax on C. Sir, what rate should I apply? Whatever rate is applicable for you. Actually, you are an individual. Sorry, you are a slab rate SSC. For you, what rates will be applicable? Slab rates. Apply that and calculate tax rate. Apply that and calculate the tax liability. Yes, sir. I did it. So till here, first step done. One figure is ready. Tax liability at applicable rate. And here, this is only gross tax, guys. This figure is only gross tax. You should not add any surcharge, cess and all. Okay, so next, coming to second step. Till here, we are done with first step. Second step, sir. This one. Add agriculture income plus basic essential limit as applicable to the assessee under the respective scheme. Add up both. Calculate tax on it. Assuming this is the total income, calculate tax on it. Assuming this is the total income of the assessee, calculate tax on it. What rates? Slab rates. Apply slab rate and calculate. Okay. We got one more tax figure now. So we have got two tax figure, guys. We have got two tax figure. Should I pay both, sir? No. D minus F. D minus F. So in simple, tax on your agree plus non-agree minus tax on your agree plus basic essential limit. I repeat, tax on agree plus non-agree minus tax on your agree plus basic essential limit. Clear? Rates, everything remains same. Don't get confused with it. Rate and all will remain same only. Oh. Now, only if your non-agriculture income, I told you what is your total income. Hello? Non-agriculture income. If that is your income and if it is up to 7 lakh or up to 5 lakh, you are eligible for rebate claiming. Depending upon the scheme you are following. We already learnt about rebate and yes. Then, if non-agriculture income is more than 50 lakh, 1 crore, 2 lakh crore and all, then the surcharge will be applicable. Okay, sir. Then health and education says as usual 4% final tax payable. Guys, this there is no change at all. Third step we call it as this is no change. Only change is this part. Okay, different. Rates and all will remain same. They are just given on different format for you to confuse. Okay, that is for a farmers. Oh, they will get confused and start. They will end up paying little more tax. Will they actually enjoy 100% exemption on agriculture income? May not. Slightly they would have pushed a little higher. That's all. It doesn't mean that they are paying tax on agriculture income. They are actually paying tax on non-agriculture income only. But just they will try to push you for a higher. That's all. Clear? Yes. Relief. Marginal relief. Now guys, whenever my total income is more than 50 lakh, 1 crore, 2 crore, 5 crore or 10 crore, I am liable to pay tax. Now assume guys, listen, I will give one example. Sir, if my total income is exactly 1 crore, my tax is 30 lakhs. My tax is 30 lakh. Now my total income is 1 crore 1 lakhs. But my tax liability is going to 33 lakhs. I'm just taking an example due to surcharge and all. Clear? Only for 1 lakh increase in income, my tax liability is increasing by how much, sir? 3 lakh. Government felt, no, this is not fair. From assessee point of view, only income increased by 1 lakh, but tax liability is increasing by 3 lakh. Why? Due to surcharge. Because when surcharge is applicable, they will not charge only on the tax of 1 lakh. They will calculate the surcharge on the entire tax, whatever you would have calculated on 1 crore only. Clear? So increase in tax is more than increase in income. They thought, okay, fine. Whatever is the difference, we will try to give it as a relief. We will try to give it as a relief. Yes, that is what the concept behind the relief. So if your total income has crossed the threshold limit for applicability of surcharge, but by a small amount, then you can apply the following steps and claim the marginal relief. Sir, now when should I exactly claim and all? Is there any fixed number? No, guys. Clear? Again, we have to use some bit of common sense there. Okay, only if it is little bit more than the threshold limits, apply it and check. Sir, it is little bit more, but I am confused. Should I check or not? Check it. If he is eligible, you will get it. If not, relief will be zero. Nothing wrong. Maybe little few seconds you would have spent more. That's all on that question. Okay. Let us see. It is applicable in case of all the SSC where surcharge is applicable. But is it applicable always when surcharge is applicable? No. Marginal relief has to be checked only when total income is marginally more than the threshold limits. That is either 50 lakh, 1 crore, 2 crore, 5 crore, 10 crore, as the case may be. Why surcharge is applicable for you? Because your total income has crossed certain limit. Check. My income, is it marginally more than that or by a bigger amount? If it is by a bigger amount and all, no need to check this. Okay. Here I have divided this into 3 parts, guys. Okay, 1, 2, 3. Why 3 will not look like 3? Sure. First step, nothing special, as usual. Take total income, which you would have already computed, calculate tax on it. That is whatever is the rate applicable for you, calculate tax on that rate. Then surcharge as applicable. Surcharge is applicable for you, no? Because that is why you are checking this relief. Add it. Don't add this. Stop it there. One figure we have derived. Okay, sir. First step is as usual, nothing new in that. Next, tax on whatever limit you have crossed, na, calculate tax on that. Whatever limit you have crossed, either 50 lakh, 1 crore, 2 crore, whatever limit you have crossed, calculate tax on it. And this I will explain later. Then total income minus 50 lakh. Whatever you would have taken here, total income minus that you do. Total income minus that figure you do. You will get total here. Lower of A or B you have to take. Lower of A or B. That is the result of second and first step. Add 4% and pay it. If only A is more than B, you are eligible for a relief. You are eligible for a relief. Guys, there will be slight confusion. So let me explain with the numbers first. Okay. Now assume, guys, my total income is 51 lakh. 51 lakh, which includes completely normal income. Calculate tax on 51 lakh. 51 lakh. Guys, randomly I am taking random figures. 20 lakh assume. Now, when total income is more than 50 lakh, is surcharge applicable? Yes. How much, sir? 10%. So on 12 lakh, on 20 lakh, 10%. How much it comes to? 2 lakh. So what is the total figure here? 22. If there is no surcharge, if there is no concept of marginal relief and all, I have to add 4% cess for it and pay it. That's all. Scale band. But sir, my income is slightly more than 50 lakhs, sir. I want to check the relief, sir. Can I check it? Yes. Check it. Now, what is the figure I have crossed? Why surcharge is applicable for me? Because my total income has crossed 50 lakh. Calculate tax on 50 lakh. Calculate tax on 50 lakh. Assume I am randomly taking the figure. It is coming to 19 lakh. Assume it is coming to 19, not 19. Let me take 19.7 lakh. 19.7 lakh. Okay, sir. Is surcharge applicable when your total income is exactly 50 lakh? No, only if it is more than 50 lakh. So surcharge will not come here. Surcharge will not come here. Next, add total income minus the limit what you have crossed. What is the limit I have crossed? 50 lakh. What is my total income, guys? 51 lakh. What is the limit did I cross here on which I calculated the tax? 50 lakh. So 51 minus 50 lakh comes to how much? 1 lakh. So this will remain as how much? 20.7 lakh. 20.7 lakh. Will I get a relief? Yes. How much, sir? 1.3 lakh. 1.3 lakh. Did you guys get it? Yes. Okay, please be careful here. You will calculate tax on the limit what you have crossed. Later, you will add the difference between your total income and the limit you have crossed. Clear? Now, how much should I pay, sir? 20.7 plus 4% cess I have to pay. Because whichever is lower, I have to take, which is lower, 20,70,000, 4% health and education cess. Did you guys get it? Yes. So, in the second step, surcharge will not come if you have crossed first limit. If you have crossed first limit, that is 50 lakh, surcharge will not come. Whereas, next, observe now. Now, let me take total income as 1 crore 1 lakh. 1 crore 1 lakh. I am a resident individual. Okay. Yes. Calculate tax on total income. Calculate tax on total income. Random figure, some figures will come. Then surcharge will be how much? 15%. Surcharge will be how much? 15%. Then add up both and take it. One figure is ready. Notation here. Next. Calculate tax on the figure what you have crossed. How much is the limit I have crossed? 1 crore. Calculate tax on 1. Clear? At whatever rate applicable to the assessee. Next. Sir, is surcharge applicable if my total income is 1 crore? Yes. If total income is exactly 1 crore, still surcharge is applicable. How much, sir? 10%. More than 50 up to 1 crore. So should I add surcharge here, sir? Yes. How much? 10%. How much? 10%. Okay, sir. Now, total income minus the limit what I have crossed. 1 crore, 1 lakh minus 1 crore, 1 lakh. Clear? Add up all. Add up all. You will get this. Next, compare this to whichever is lower, I have to pay plus 4%. If A is more than B, for the difference, I can claim relief. Why, sir? Simple. If there is no relief at all, I should have paid this to the government. Huh? If there is no concept of relief, how much should I pay that to the government? This figure plus 4%. But did I pay? No, because B was lower. B was lower. How much did I pay? B plus 4%. B plus 4%. Now you may ask me, sir, you told only if it is marginally more than that, we have to check. What if it is by a bigger amount? For example, 1 crore 20 lakh you assume. 1 crore 20 lakh is the total income figure. Okay, clear? Now assume you have a confusion. Play the steps and calculate, nothing wrong. Okay. Total income 1 crore 20 lakh, calculate tax on it, tax on total income, then surcharge will be at 15%, calculate it. Okay. Then what is the limit you have crossed? 1 crore, calculate tax on it. Then if income is exactly 1 crore, is surcharge applicable? Yes. How much? 10%. Add it here. This will be the term. Total income is how much? 1 crore 20 lakh. What is the limit I have crossed? 1 crore. Difference will be 20 lakh. When the total income is increased by a bigger amount, automatically this figure will go up, guys. When this goes up, B will go up and automatically B will become higher than A. So whichever is lower is what? A. This is your normal calculation. Which is your normal calculation, correct? Huh? So A plus 4% you will end up paying, which is nothing special. Nothing special for us. Is that clear? So if your income has crossed the limit by a bigger amount, then definitely this part will increase. As this increases, B will go up. In that scenario, B will be more than A. That means A will be lower. So you will pay A plus 4%. Yes. A plus 4%. Which means you are not eligible for a relief. So please be careful. Relief is available only when A is more than B or B is less than A. If it is vice versa, can I claim the relief, sir? No, you cannot claim the relief. Because you will end up paying the tax as usual, normal. Let me give one more example, guys. Now assume I am a resident individual who is following default regime. My total income is 5 crore. 5 crore 2 lakh. 5 crore 2 lakh. Tax on 5 crore 2 lakh you calculate. Then surcharge as applicable, how much it would be? 37%. Assuming no special income, nothing. Assuming no special income, nothing. Next, second step. Tax on how much? 5 crore. Then, if total income is exactly 5 crore, is surcharge applicable? Yes. At what rate? 25%. Under default regime. Sorry, I am following under optional. Okay, because this 20, 37 and all will come under optional, not default. Optional. Okay, yes. 25% is the rate if your total income is exactly 5 crore. That is more than 2 crore up to 5 crore. Then here it would be 2 lakh. 5 crore, 2 lakh minus 5. Rest of the things you can check. Okay. My main intention is this points you have to get it. Rest I know you will manage. Is that clear? Now, this is the concept of marginal relief, guys. But I want to just mention one scenario. If at all, if they want to test you, normally this and all they will reserve for finals. But let me make you ready for that also. Guys, if by chance, if total income includes special income and normal income, what should I do, sir? Here, as usual calculation. First calculate tax on special income and then on normal income. Then on normal income. Assume your income is 51 lakh. Let me give an example for it. Sir, this is 11 lakh special income. Normal income is 40 lakhs. Okay. You will apply first tax on this, calculate, and on normal income, slab rates and calculate. Okay, sir. So here we have to calculate tax on 50 lakh. Na? So 50 lakhs, what should I consider? Special or normal? First 11 lakh special. Remaining 39 lakh normal. Means first priority should be given for special. First priority should be given for what? Special. So out of 50, first 11 lakh will be what? Special income. Remaining 39 is considered to be normal. Remaining 39 lakh is considered to be normal income. Rates and all will remain same, whatever we have discussed. Clear? If at all, if they want to ask the toughest question, they may put like this. If not, normally marginal relief calculation and all, they don't consider special incomes, guys. They just give it in normal income. If question is silent, what do you always assume? Entire total income as normal income. Few assumptions which you have to make only if question is silent. Where? Yeah, here surcharge will not come. Because if your income is exactly 50 lakh, no surcharge, no. Only if it is more than 50 lakh, surcharge. So I have given it also, madam. Here surcharge will come only if total income crosses second or higher limit. Second or higher limit. If your total income has crossed first limit, like 50 lakh and all, surcharge will not come in the second step. In the second step, surcharge will not come. Why? Because you will calculate tax on 50 lakh. Now for second step, what is your total income is 50 lakh. Clear? So if your total income is exactly 50, is surcharge applicable? No. So here you will take actual total income minus the limit what you have crossed. Is that clear? Yes. So when will the surcharge come in the second step is only when you have crossed second or higher limit. What is the second limit for individual and all? 1 crore, 2 crore, 5 crore. Whereas for company and all 10 crores. 10 crore. Yeah. When question is silent, you are supposed to make certain assumptions, guys. You are supposed to make certain assumptions. Only when question is silent. What are those? I'll just put it here. If nothing is specifically mentioned in the question, assume assessee is a resident. And if age is not given, assume it is less than 60. Assume is less than 60. Then total income, if they are not given the breakup, assume the entire income is a normal income. And about the scheme to be followed is not given. Assume the assessee is following, especially that is the slab rate assessee. They are following which scheme? 115 BAC means they are not opted out. If they have only given that assessee has opted out of default and is following normal scheme, accordingly follow it. If not, please assume that they are following default. Is that clear? Is that clear? Yes. This is all about the tax rates topic. Yes, madam. There is no fixed amount. You have to check it on a trial and error basis. So if you want me to give any percentage around, keep it around in between 6 to 8%. Only if it is higher by within 6 or 8%, check it. If it is more than that, don't check it. Clear? Because numerically, if I give individually, if I have to give calculated figure and all, it becomes challenging for you. Nothing like that. Nothing like that. There is no fixed number to check the marginal relief. Okay. Now, if you are confused, if at all, if you are confused, sir, I am little not sure whether relief is applicable or not. Check it. No problem. When this extra step will happen, check it. To be safe, you check it. No, sir, my total income is 70 lakh, 80 lakh, or 1 crore, 50 lakh, and all. No need to check because it has crossed by a bigger margin. Yeah, yes, guys. So this is all about tax rate chapter.